Hey, good morning. I cannot believe we are counting down. We're almost there. Literally, this time next week is the last day of the Now Honors in Power Pink. We would have been done almost. But for right now, we've got 4 or 5 amazing people that are coming up. And today, this young man has been on. He trusts us with his brand and said, absolutely, I'll be there. He has been on our show on a monthly basis. He has been on our show whenever I call him. And then we just realized it's been over a year since he's been on our show. Chris Naugle is amazing. He is the guy behind BYOB, and it is not what you think. He's the man, and he's our expert financial strategist. Hey, Chris, what's happening?
Not much. Good to be back on. Thanks for having me.
Good to have you back, brother. One, I got to compliment you on the set. I always look at that set and think it's absolutely amazing. And I always thought it was fake until you went over there and rode the bike a little bit ago. And I said, wait a second, that's real. That is a beautiful set. Thank you so much for having that.
Oh, my pleasure. Yeah, I guess probably a lot of people think it's fake, and well, I can go grab the skateboard and prove it's not.
Okay, let's not grab the skateboard. It'll be just my luck. You're right off the set, and then we can't get you back. So what does BYOB? Because it looks like a nightclub back there. I mean, are we ready to party? What's going on?
Now, BYOB is not bring your own beer. It's be your own bank. So that's our brand. That's what we've been doing now for a very long period of time. And the thing we do for, well, about 15,000 people, that's the number of clients we have in the U.S. alone, is we show people how to take back control of their money by teaching them how to be their own bank.
Okay, I know that they're going to have to come into a lot of your classes and make a contact and all of that to truly get an understanding. But can you kind of give us the 50,000-foot view of what that means, BYOB? Because I see people running out to rent a building. That's not it.
No, it's so simple. I mean, everybody's played Monopoly, and we all know in Monopoly you got to kind of move your piece around the board, and when you pass go, you get $200. So let's just pretend we're going to play the real game of Monopoly in life, and we're going to call it Be Your Own Banker. Everyone that is going to watch this or is watching this does one thing. They all go out and make money, and they make money in various different ways. But when they make money, they have to make a decision of where that money goes next. And what we've been conditioned and trained to do is to take that money, our hard-earned money, the money that we traded hours for dollars for. And most of us, I think every one of us, takes that money and we deposit it in someone else's bank, i.e. the traditional bank. And then let's just discuss what happens with the traditional bank. The traditional bank pays you interest on your money, or maybe they don't, but let's just pretend that they do. Now, if you go back to the same bank that you just deposited money at, and let's just say they're paying you 3% on your money, and you want to take out a car loan. Are they going to give you a car loan for 3% or less, or 3% or more? It's always 3% or more, right? So they're probably going to charge you 6 or 7% for the car loan. You're making 3, they're charging you 6. What's in between is called a spread. Now, how cool would it be if all you had to do is change one thing and add one step to your life, and you could be the one earning that spread because you would be in control of your money, mimicking and doing exactly what a bank does. It truly is that simple. So here's how it goes. We take that hard-earned money, the money that we normally would have saved in a bank, not all your money, but the savings, and we change one thing, and that is where that money goes first. We do not put it in a bank. We put it in a giant mutually owned life insurance company, specifically into a specially designed, let me preface this, specially designed and engineered whole life insurance policy from a mutually owned life insurance company that pays dividends. That verbiage, what I just said, is so vital because this is not the normal whole life that your brother-in-law tried selling you. This is specially designed to do what I'm going to tell you. Now we put the money there. Now let's go back to what we talked about with the traditional bank. We've got our money sitting in our bank. So now we got to think as if we're the bank in that specially designed whole life. How much money is our money earning? Well, it's earning a guaranteed interest rate. And one of the companies we use pays 3.25% guaranteed for the rest of your life. Plus, every year, the insurance companies pay a dividend. Not guaranteed, but they've never missed one. So guaranteed interest plus dividend gets you over 5.5% with all the companies we work with. So now 5.5 is way better than what you're making at the bank. Plus, the guaranteed portion of the interest is guaranteed to never change for the rest of your life. So we're already one off better. Plus, we got a death benefit. But here's where it really gets interesting. We're still now going to go out and buy things because that's what we do. We're going to buy houses and cars and washer and dryer. So we take the money from our bank, not their bank. We take a loan from our bank and we buy the car. Okay, let's just use a car. Now, when we took the loan from our bank, let's just use some math. You had 50 grand in your bank, your specially designed whole life, and you took 40 grand out to buy a car. How much money is in your bank?
10.
Wrong. All of it, all 50. And this is where people get tripped up and they start saying, this sounds too good to be true, but it's so simple. It's not. Because when you took a loan from the policy, you didn't take your money. The insurance company advanced you in the form of a loan, part of your death benefit, which they guaranteed to pay you the day you die. But you don't want to die today. So you get to use your death benefit while you're living, and you get to earn interest and dividends on an uninterrupted compounding basis on all of the money because you didn't take your money out to buy the car. You took part of your death benefit, and the insurance company charged you interest on your death benefit at a lower interest rate in most cases than what they're paying you. So now, just like the bank, you make the spread, not the traditional.
Wow.
Right? So, but now we got one more thing we got to do. Remember, we were doing a circles. We started with the money on the left side in the policy. We moved it over to the right side to buy the car. We got to complete the circle. If you borrowed money from a traditional bank, you made a monthly payment of principal and interest to the bank, whatever interest rate they're going to charge. We're going to do the same exact thing. We're going to make a monthly payment, but we're going to pay it back to our bank, that specially designed whole life. And when we make those car payments, whatever they are, this is the bottom part of the circle. We're going around that and put it back in the policy. How much money do we have if the car payment was $500 and we paid our bank back $500? Well, if you owned and controlled your money and you owned the bank, i.e. the policy, you have all of it. $500. You lost no control of your money. You didn't leak any interest to their bank because you kept all the interest in your bank. Now just imagine doing that over and over and over again. Your money never stops working for you. It works 24/7. That's compounding interest on an uninterrupted basis. That is being a bank.
Good grief. Now, question, playing the devil's advocate, it's like, what happens, God forbid, knock on wood, the economy tanks and you lose your job and you can't pay your loan for a couple of months? Do you send a collector to yourself?
Yeah, you go to the mirror and you look at yourself in the mirror and you say, all right, Mr. Banker Chris, got a little problem. I lost my job. And that payment for that car, I don't know when I'm going to be able to make that again. So can I get a deferral on those payments? And looking back in the mirror, smiling is you, the banker, saying, hey, it's your bank. You make the rules, you set the terms, no problem. Just defer it. And when you get back on your feet, start making payments. We'll just push the term down a little bit longer. No problem. Now, if you tried that with your traditional bank, what are they going to do? In the middle of the night, Bubba's going to show up
get your car
with a tow hook and when you wake up, your car is not going to be there. But when you own the bank and control the money in the bank, that doesn't happen. You set the rules and you make the terms.
So how young, how old do you have to be able to have this special policy? Is there a limit in age?
There's really not. I mean, if you're a minor, you would just need consent of your parents. So your parents might need to be the owner until you're an adult by that standard. And then the oldest we've done this for is somebody who's 74. And it works beyond that. We can do this up to 80 years old. But from 74 to 80, we lose a lot of the efficiency in the policy that we would have for somebody that's slightly younger. But game on up to 74. And my daughter, I took her first policy out just under 6 months old.
I was going to ask, is that something you would recommend young parents to do, is to set up their children that way?
I know we're not going to have time, but I have videos on my YouTube channel where we show my daughter's policy and how her banking system, and her first policy only had $5,000 a year going into it. I've set up additional policies since then, but that one policy will fund all of her college, a down payment for her first-time home, her wedding. It will then fund her kids' college, and then it will pay her, I think it was $80,000 or $90,000 tax-free per year, starting at the age of 60 until the age of 90, and there's still like $2.4 million left that she didn't spend. So is that good to start for your kids? Well, I'll let you be the judge.
Okay, so what's the catch? Somebody out there is going, what's the catch? There's got to be a catch.
Of course, there's a catch. So if somebody's not saving money, if they're living paycheck to paycheck, this isn't going to work. Because remember, I said you got to change one thing. And what was that? Where your savings goes first. But if you're making money and spending all your money, this just will not work. We got to get you to the point where you can save at least 10 times your age. So what was that? Add a zero behind your age. So I'm 47. $470 monthly. So the minimum amount to make this work is 10 times your age. Again, add a zero behind your age, and that's the minimum monthly you would have to be able to save in order for this to work. So that's a problem for some folks, okay? Secondarily, there are some people out there who, from a medical standpoint, just are not healthy enough to qualify medically for the life insurance contract. So if that's the case, I'm not saying it wouldn't work for them, we would just have to borrow a life, a spouse, a child, a business owner, or like a business partner, someone else's life that you have an insurable interest on, and then you'd be the owner of that contract. So that's another negative, is not everybody can qualify for this. And the third, and I would say final, is when you put money into this life insurance contract, there is a death benefit, and that death benefit does come with a cost. Now, we reduce the death benefit the way we design and engineer these to the absolute minimum by IRS standards. So essentially, we're reducing our commission by 60 to 90% so that you have 60 to 90% more money immediately. These contracts that we design have liquidity immediately in the first 30 days, but it is not 100% of the money you put into it. So for example, if you put $1,000 in, you do not have $1,000 to use immediately in the first 30 days. You might have if you put 1,000, you might have 850 or 900, so 85 to 90%, but not 100% in the first 1 or 2 years. So that's also a negative, but it's not really. It's just a mindset problem, because people don't just put money in a bank account and then in a year come back and take all the money out of the bank and then say, hey, I told you I could with my bank account. You can't do that with that stupid policy. But if you're one of those, well, this wouldn't work for you either.
So if someone comes to you and says, I'm ready to go, I'm 56 years old and I can do this, I can do 560 a month, no problem, but I haven't saved anything to this point, do they have to have a certain amount already saved before they even approach you?
No, that's the good news. So if somebody like that came to us, that would be a really, really good starting place, because remember, this is a guaranteed account. So not only is this going to be a great forced savings for them, give them the ability to have liquidity and allow their money to grow at a higher velocity than any other guaranteed account out there, but not only that, this is going to serve as their emergency fund. So as they're saving that 560, remember, this money's liquid. This money grows tax-free and is protected against judgments and liens, plus has a death benefit to protect them if some unforeseen event should happen and they died too soon. But not only that, we always tell people, if you've never saved a penny, the first thing you want to do is build up an emergency fund, because if something happens, you lose your job, we need 6 months of income saved up. This can double down and become that emergency fund. So this is a great first step for folks like that.
With all the craziness, let's shift gears a little bit. I'm in Las Vegas, and when I first came out here in 1971 with my parents, you could look from one end to the other end and see the whole town. It was all of maybe 3 miles. It was nothing, right? And I'm in Vegas now. And now they're looking at, we're at 2.3 million. They're saying we're going to be over 3 million before the Olympics happens in 2028. We got $30 million houses being etched into the mountains right now, like we're LA or Beverly Hills, and the interest rates are going crazy. Where do they start? Where do you get started? Because they're not sure if they could even buy a house anymore, if that's even possible to be able to buy a house, because we're getting to be like New York and Chicago and LA. Do they just get out of here and go move to somewhere in Texas or Oklahoma? Or is there a way to say, you know what, I'm 30 years old. By the time I'm 35, I want to buy a house. And Chris said I should, besides pray.
Well, it's a very different United States than the one that maybe we remember. And, home ownership back, I'm 47, back when I was younger, that was like what we all wanted. And I think you would probably say the same. But now today, millennials, Gen Z, all them, like home ownership isn't on as high of a priority. And also, even if it was, we see that now there's tons of demand for new homes, but tons of demand at $300,000. Right? If you look at the demand pool of people that want to buy houses, like first-time home buyers, they want to buy houses significantly under the median home price, like especially Las Vegas. Like they just cannot feasibly afford the housing stock at the price that it is. And not only at the price that it is, at the interest rate that the banks are charging, because we've been in this heightened interest rate cycle since the Fed jumped rates up trying to curb inflation. That off the record they created, but we won't go there today. But now the Fed is dropping rates. So they just dropped in 0.5%. They're saying they're going to drop another 0.5%. And there's about a 1% anticipated in 2025. So we potentially could see interest rates come down 2 full percentage points by the end of 2025. So that will give some breathing room to first-time home buyers, because as rates come down, it makes them eligible to buy a more expensive house. Because obviously, if an interest rate's lower, that makes them eligible to buy a slightly higher priced house. So today, they might be, no bueno for buying a house, because they just, from an income in debt ratio, they don't qualify. If the Fed drops rates another 0.5%, now maybe they do qualify. But then it comes to the question, is now the time to buy a house? I'm never going to stand in the way of somebody that wants their dream house. So I would say, hey, if it's your dream house, your primary house, and you got a family you need to put a roof over, go at it. I mean, there's no other, you don't really have another option. But if you're thinking, well, I'm thinking of upgrading my house, doing a bigger house, I'm looking, for something, maybe waiting would be a really smart idea. And listen, everybody's different, but here's what's going to happen. And I'll paint the future for you. And this is what I do for a living. I've been doing it for 21 years. I think I'm pretty dead on right. Next year, after the election, we're going to see a weakening in the economy. We're going to see a very, very big correction to the stock market and the overall economic market, cycle in the economic markets. And that's going to result in prices of things coming down, because, hey, one thing that is certain of an economic slowdown, we'll call it a recession, because that's a word most people have seen in the news. A recession is pretty much imminent next year. When a recession happens, one thing always comes along with that: job loss. People will become unemployed. And when people become unemployed, there will not be buyers for all the housing stock. So what has to happen is supply and demand. If there's not as much demand, what happens to the supply? The price must come down to meet the demand. You can expect that will happen. Now, a lot of people will tell you that's not going to happen. Oh, no, when interest rates come down, the price of housing will go up. Yes, in the interim, in the short term, yes. But that won't be the case when we're in a recession. Mark my words. I've studied recessions too much to be wrong with this. So if you can wait, you might want to wait, but make sure you've got multiple income streams, because your job may not be as stable as you think.
What does AI have to do with finance? Is it affecting finance at all?
Huge. Yeah. AI, and I'm not an expert in AI, I want to preface that, but it is something that we can all see is coming and is going to be here to stay. So AI is definitely going to replace a lot of jobs, but it's also going to create a lot of jobs. So the amount of jobs created from AI, I don't know if it'll support the amount of jobs lost because of AI, but it is speeding everything up. If things aren't fast enough now, they're going to get even faster, because AI allows us to do a lot of things way faster than we do them now. So when it comes to just finances, AI will help people create their budgets. AI will help people manage their investments. I mean, there was just a study done with this AI program in 30 days, if I'm not mistaken, I might have the numbers wrong, this AI program or this AI system was able to take $1,000, trading it in stocks and mutual funds, ETFs, all that, and turn it into, I think it was like $500,000. That has never been done by a human being, but a computer could, because of the speed of processing and the speed of trades it can make. So I don't know if that's the future we can expect. And even if we did get there, everybody's going to be doing it. So it's going to become the norm. So it's not like you're going to be able to take 1,000 and turn it into 500, but AI is changing the entire financial landscape, and it's changing it, in my opinion, way too fast, because there's a lot of things not being thought through with how AI is being implemented. But that's just my 2 cents on AI.
Every time I see you on stage, you come in, and I watch you. Of course I do, brother. I watch you, but I also watch the audience, and I watch them go from, who is this guy? BYOB. What is he talking about? To, oh my goodness. And they just basically tackle you when you come off the stage. What made you decide, this is the route? Because you could have put ads on social media, filled up your calendar, and stayed right in your home with your wonderful set at your office and never left home. You got family, you got everything. But you come out there on these stages and, buy pizza for lunch or something. And I just watch them go bananas. Why did you take that journey and take that path?
Well, I mean, I'm very big on social media and YouTube and all those, but the one thing you don't get is that interaction you get in a live event, and you can't duplicate that. It's kind of like AI can do a lot of things for us, but it takes the human emotion out of things, and that human emotion is important. So when I speak on a stage and I come off, and you're right, like I basically do get tackled. I mean, it's overwhelming, but I've gotten used to it. I can't get that when I go on and do a live for 1,000 people or put a YouTube video up that goes viral and does 357,000 views. Like, it's great. You get the comments, but it's not the high five. It's not the hug. It's not the sidebar conversation where you really get into the person's problem and they need it solved. And I know I can solve that. You know, it's just, there's a barrier of the human emotion that isn't there. I can put it all out on camera, but when I'm live, I get to put it all out from stage, and then I need to come off stage, and I can then share in that human emotion with all the folks that listen to what I was saying and are thinking, oh my God, this could solve my problem. Because that's all we do, folks. We just solve people's problems, just money problems.
You know, you have the biggest heart. And no matter what, I see people come up to you that met you 2 years before, and they're just, oh my goodness, you know, being a part of your program has done this, and meeting you has done that. And it's like, here's this guy, you know, because when money's always cold, you know, everybody thinks money is cold. And you bring heat, and you know, even the background of your color back there is red because you bring heat and fire, and you have the biggest heart. And every time I have called you and said, Kenya, I ran into your secret knock a few weeks ago, and you were like, don't usually do this on a weekend. And I said, it's the only thing I got left for my life is the weekend. And you said, I got to come in, and I think you said feed the cat. If I'm not,
I did. Yeah, we got a shop cat, Mr. Lazy Cash. Yeah, I came in, I gave him his nice treat. Yeah, he loves it.
He's like, I got to come in and feed the cat. So you said you would come up here and do this. What's next for you?
Oh, a lot. So we've got so many things in the hopper right now. I can't let it all out, but you know, my tech platform, Private Money Club, which is a dating site for money. It's people with money meet people that need money. We are about to launch something. It's going to be a massive disruption. We've been operating for 3 years. We have 8,000 members in that community, in the Private Money Club community, and we're launching a brand new version. It's 3.0. It is revolutionary. It is literally going to flip the banking industry up on its side, because pretty soon people are going to have to ask the question, should we go to the bank or should we go to Private Money Club for our loan? And that's going to disrupt banks. So that, I think, is a huge part of what's coming for me, because what I've created, what I drew on a napkin 5 years ago, is now really taking hold. And like you had mentioned when I spoke on stage, all the people, that was so cool, like saying how it changed their life and how they were able to like solve their problems. That was so just enlightening, and just such an honor to hear that. But now I'm able to do it with this technology platform and this giant community that we're creating of private lenders and private borrowers that will disrupt banking. I mean, make no two ways about it. I don't like traditional banks. I think they're an awful business model, and I think they screw people. So I'm teaching and empowering people to be the bank, but Private Money Club adds that element that I've never had before, that now literally doesn't just teach them how to be the bank, allows them to actually go and do exactly what a bank does every single day and mimic the bank to its nth degree.
You know, we consider you family. You're always welcome to come back anytime you want to come back. I want to thank you because I explained to you earlier, we're going to do another award. This one is for everybody, and it's the Trailblazers. I want to honor all these Trailblazers that I've had the privilege of meeting. We've done almost 800 segments and episodes since January of 2020, you know, and be able to honor them. And I can't wait to honor you as our first ever financial strategist for Trailblazers in March. You're killing it, dude, and you do it from a place of, let me show you how to do this. You never come off like I'm the expert and you're going to do what I say. You're always like, hey, how can I help? And I want to thank you publicly for doing everything that you do and always having my back. You are absolutely the best. Thanks for hanging out with us today.
Thanks. It's been an honor and a privilege.
You're the best. All right, everybody, you know what to do. If you want to get in touch with them, go to chrisnaugle.com. It was on the screen if you didn't see it. If you didn't see it and you couldn't write it down, don't call me. Go to Tigo Direct, type in BYOB. He's coming up. Type in Chris. He's coming up. Send him a private message and say, hey, I saw you on the 100-day challenge. I want to know more. He'll reach back out to you. It costs you nothing. It costs him nothing. I hope you enjoyed this episode. You know I want you to come back next time. And as always, I'm Tigo. I'll talk to you next time. Yes, that's tomorrow. Have a good day.